Good morning, traders, and welcome to Friday, the 5th of February morning update from Phoenix Blue. So, what a week it's been. Where do we start? We started off on Monday with a great trade on the Kiwi, shorting from 65.50. We hit first target and break even on our second position. The next thing, all hell broke loose, and the question is, why did this happen? Was it data? Was it something people said? From what we can gather at Phoenix Blue is, and we'll put it this way, it blew our analysis out of the water. But guess what? We were never overexposed, so it's not too much of an issue. We can never have a really bad day because we always have our risk management in line. But when we look at the PMI numbers, yes, they were worse than expected, but they still showed expansion for the economy. So, is that really what caused the sell-off in dollar? I don't think so. The next thing that was potentially a highlight was FOMC member Dudley hinting that no further rate hikes. So potentially that was the scaremonger in the market that caused either the short coverings or big sell-off in dollar, whatever it was. They did their trick, and yeah, it cost us some capital, but listen, we come back, we start next week. We're not trading today. We didn't trade yesterday. We're going to come back fighting fit next week and prepared. So what happened last night? Well, we had the RBA statement out last night. We had yesterday the Bank of England had their vote for monetary policy, and the vote came in changed. For the last couple of meetings, it's come in at 8-1, with one member voting for a rate hike this year. This year, it came in at yesterday it came in at 9-0, i.e., the one very bullish member of the Bank of England committee decided not for a rate hike. So there's a bit of bearish sentiment there coming from the committee. And then today, we've obviously got the non-farm payroll. So let's have a look at the news that we've got coming out. So today we've got unemployment rate, non-farm payrolls, and trade balance from the US, all going to have a major impact. We're looking for a better jobs number because our bias still does lie with dollars. So I would like for it to at least be 190 or starting with a 2 preferably. Trade balance obviously is going to have big impact, but then we move over to Canada for unemployment rate and net change in employment. So the Canadian economy has been having a real tough time with crude oil sinking in value. So it'll be interesting to see what sort of numbers come out here. But again, it's not going to affect us because the only trades we're currently in are gold long and sugar short. We'll have a look at those soon. So let's have a look at what happened through the Asian session. So we'll start off with the Nikkei. The Nikkei, well, you can see what's happened this week. After the Bank of Japan announced negative interest rates, we had a huge rally up in the Nikkei, only to see it come all the way back where it started from, back at support. So the question is, what's the next move here? The Bank of Japan going to act again? Is this just a sell-off in equities and it's now moving into Japanese yen? What is actually happening? So maybe it's not a bad time to be sat on the sidelines. Let's get our direction and let's wait for the markets to give us the clues that we require to trade. The next market we're going to look at is the Shanghai Composite. Fairly quiet week in the Shanghai Composite. It's been a bullish week, but nothing to shout home about. We'd anticipate that this market is going to come back up to test resistance again before a sell-off. The next market, Chinese yuan. Well, look, yesterday's big sell-off on the dollar. We can see that this is now coming back and is nearly pared back all its losses, okay, in the Chinese yuan. Okay, open trade. So this is one of our open trades. Sugar, this is where we went short back here. This was a commitment of traders trade. So we went short up here. We've been in this trade now coming up 7.5 weeks. It's doing fantastically well. We took more money off the table yesterday, so we took another half of our position off, and we're looking for this retracement back up into resistance before we sell off again. If you are looking and wanting to understand how to trade using the Commitment of Traders report, then drop us an email at info@phoenixblue.co.uk with exactly how you you're looking to use the commitment of traders, or if you've never used it before, we can definitely help you there. This is something that we specialize in. Okay, the next chart we're going to look at is gold. Now, we've taken several very good trades using the commitment of traders report. One was here, and one was here. Okay, and you can see the kind of returns these have had. This is off the weekly chart. Now, we did go long gold at 10.75. We're currently over $75 up in gold right now. We banked half a position yesterday at $68. We've locked our stops in now at 11.20. So we've already got another $45 of profit locked in. This is moving really, really well. We're looking for targets initially of 1200, moving up to around 1250. We do see gold as a bullish year this year. Okay, so we're looking at it as a risk-off year, safe haven asset. Okay, we're going to move over to GBP USD. So we took a trade in here short on Wednesday from 146.30. This supply zone we highlighted, and we've been showing you now for the best part of a week or two. We actually went short, hit first targets on Thursday for Mr. Carney to speak and send price back up before slowly slipping down again, and it stopped our second position out for break even. Current price now 145.30. Little bit of a shame because we would have still been in this trade and over 100 points up, but we had locked profit in and moved our stops down aggressively with the speech impending. Next market we're going to look at is the Aussie dollar, and what I want to show you here is I've done some analysis this morning, and this was our initial sort of wedge pattern formation, and we highlighted we were looking at this test here, test of structure, test of the trend line, and we wanted to get short here on Wednesday. Now, Wednesday it missed our entry by about 7 pips. We had an entry short at 71.35. It came up to 71.28 or something like that, and then moved away, would have hit our first target. So there was no more further trades there for us. The market then came up, and I'm looking at this now and saying, why is it stopping here? What can I see? Well, if we have a look, guys, you see I've put this second arrow here, and you're probably thinking, why have I done that? Well, I'm going to just change this to a line chart, and if I just flip this up here, what you'll see is we've got support, beautiful clean break, retest using the line channel. The line channel is closing price. Now, had this been any other days from non-farm payroll, I'd potentially be looking at shorting this and going back to the GBP and shorting this. But it's non-farm payroll. I don't want to take the risk. It's about capital preservation. You preserve your capital, you will make money in the end. Now, the reason I'll be looking at these as well is because I want to show you the dollar index chart. The dollar index chart, this is something I've posted on Instagram. So our Instagram page is Phoenix Blue Trading. Okay, now if we look here, you can see clear resistance, 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 breakthrough, support, support, and it's come straight back down to test again. If we look this way, we've got support, support, support again. And then if we go across the horizontal, we've got a lovely support level there. So we've got 3 different areas of support here, plus a big number, 96.50. If this holds today, then I expect to see further bullish momentum with the US dollar. So any sort of good jobs numbers, I'll be looking at buying dollars continued next week. It has been our bias to be buying dollars, but unfortunately, no one sort of predicted this huge sell-off in the US dollar. It's one of those things that does happen. So guys, just remember, even when it is a bad day, it should never be a really bad day due to risk management. So that's the end of our trading week this week, guys. We're not trading. We're going to look at the news. We'll reanalyze at the weekend. We'll put out our long video, Dissect and Detect, and you'll be able to watch that over the weekend. If you like what you see, you enjoy the information, please click subscribe. Also hit the like button as well. And thank you for following. We'll look forward to seeing you over the weekend with our big weekly analysis, looking for opportunities ahead. And then we have the morning update coming each day next week. So thank you guys. Have a great weekend. Enjoy and prepare for the week ahead. Bye-bye.